Welcome to LedgerCast. I think you're going to enjoy this interview with Philippe. First, I want to talk about Brave New Coin. Thank you to Brave New Coin for being a Ledger Status partner and a sponsor of every episode of LedgerCast. They have a lot going on right now. Before I dig into some of their immediate news, I want you to check out this video that they did. It's got an audio narration that's, I think, applicable that you'll enjoy. Let's start there, and then I will talk about the specific stuff that they have going on.
Crypto, the asset class that doesn't sleep. The market moves quickly, with profits made and lost around the clock. You've excelled playing by the old rules, but new money is different. Stock splits have become forks. Dividends are now airdrops. Buybacks are now a burn. Even skilled finance professionals struggle in an ecosystem with hundreds of exchanges and thousands of trading pairs. Crypto assets rise or plummet on the day's corporate announcements. It's a whirlwind, and you can barely keep up. You need enhanced tools that deliver timely data and accurate analytics so you can make informed decisions. Welcome to BNC Pro. Turn data into insights with superior tools for industry professionals. The BNC Pro portal provides a suite of customizable, institutional-grade applications that help guide decision-making and streamline workflow in the blockchain space. Track trades, wallets, exchanges, news and announcements. Benchmark against indexes and industry verticals. Get global alerts. Collaborate with team members. And tap into qualified data from the world's exchanges. Whether you're in corporate treasury, wealth management, or simply trade currencies, the BNC Pro platform is built to deliver. Finally, the all-in-one terminal experience you need to master this brave new asset class. Sign up for your free account today.
That's BNC Pro. You know, I've been talking about that a good bit, and I just wanted you to be able to check that out because I want to also dive in for a second about what they have going on, and that is a token that's going to be behind BNC Pro. As an American, I cannot advocate for or promote a token from a perspective of a sale. They're doing an IEO through liquid.com. That is not what I'm promoting here. I want you to be able to make that decision for yourself, but let you know that it is part of the ecosystem on the back end of BNC Pro. It's one of the options available to utilize the platform. Rather than me make that case, because I can't and don't want to be the person to do that, I want to be fully transparent, though, and let you go to an article on Medium where the CEO of Brave New Coin, Fran Strainer, gave the case for the tokenomics and all that. I'll let you make that for yourself. I will continue to promote BNC Pro as a platform here, but this is kind of where I'll leave it with the token sale and how to do all that. That is up to you as an individual investor, whether it's appropriate for you to be a part of and all that good stuff. I hope this is clear and transparent and good for you. And yeah, thanks to Brave New Coin for being a partner. And yeah, we'll get to the show here. Hello and welcome to LedgerCast. My name is Brian Krogsgaard. I'm here today with Philippe Bekhazi. He's the CEO of XBTO and the interim CEO of Stablehouse. These are two entities that we will cover in depth today. Philippe, welcome.
Thank you, Brian. Pleasure to be here.
Yeah, I'm really pleased to have you. I was just saying before we hit record that I've really been interested in kind of uncovering some of the plumbing of the crypto ecosystem. You know, people talk about the plumbing of the markets and legacy markets. Often, whenever I hear about them from a crypto perspective, I hear that they are, it's just a less developed world. There's more green space, more to figure out, some quirks, a lot going on. This is your bread and butter. Am I correct in saying that?
Yeah, it has become my bread and butter. XBTO is going to turn 5 in February, so we've been around crypto for a little while now, longer than most. And you are right. The plumbing, the internal plumbing of crypto is quite messy in most places, and it's a lot of reinventing the wheel. But it's also a source of opportunity, and it's also a source of creativity. And people just do things differently, which is welcome in a way.
Yeah. So let's start with XBTO. You've at least according to LinkedIn, you've been there since February 2015. what kind of firm did it start as? And then what kind of firm is it today? How much different is it today?
Yeah. Well, look, when we started XBTO, it was, it took me a little while to start XBTO. Frankly, I did not have a thesis yet. In 2013, 2014, I got interested in Bitcoin in 2011. And so it really took me some time to say, what do I want to do in this space, or how do I want to be involved? Do I just want to be a passive sort of Bitcoin miner, holder, or do I want to get involved and do active trading? And what does that look like? And in 2014, I figured, I was meeting with some local exchanges, and I thought, well, the liquidity on these exchanges is quite bad. My background has been in trading, and I've always been interested in meshing finance and technology. In 2012, I had started a high frequency FX managed strategy for a large firm in London. And so we had developed some technology already. And I thought, well, crypto in 2015 was very much nothing. The daily flows were kind of small. Crypto was trading around 100, 200, $100. I can't even remember. It feels like decades ago.
The depths of the bear market after that first big move up above 1,000.
And the dollar vol or dollar volatility was quite low, so you can make maybe $80 a day, $100 a day. It was definitely not something that you could bank your career on at that time. So it was sort of, okay, let's try it. It's going to be a hobby, and so it got started in February of 2015. It was a sort of a little bit of a joint venture with an existing exchange, and we decided to say, okay, we're going to make a better book in especially Bitcoin. Actually, it was only Bitcoin at the time. Ethereum had just launched its ICO in July of the previous year, I think, but it was not something that we had been looking at in terms of making a market in. So, it started out slow, but, I realized that as time went on, the price was kind of trending a little bit higher slowly, and the volumes were coming in as the price contracted a little bit on the bid ask. So I thought, okay, there is a bit of a trend here. Maybe, if we're lucky and price goes up, volume goes up, volatility goes up, maybe we can pay for a salary, by the end of the year. And basically in June or July, I called. So at the time, Rashad, my CTO, present CTO of XBTO, he was already with me working on this. He had been close to me for a number of years prior to that. I think we'd been working on stuff since 2010. And I met Walton at SAC Capital in 2005, and he was working on another project, also high frequency, in another space, in the commodity space, and we kept in touch. And I thought, he was kind of like working his strategy was kind of working, and he was looking for another project to do, and I thought, great, let's start discussing this crypto thing. He didn't really believe too much in it at the time. It took a little bit of time, but in June or July, he decided to join me as a partner of XBTO. And effectively, there's only there's two direct partners of XBTO. It's me and him, and Rashad is an indirect partner as well through one of my holdings. And basically by the end of the year, most expectations were shattered. Things were really were getting real. And
was it because of the volume, or because of the price, or the combination?
Well, so we started on one exchange. By the end of the year, I think we were on 6 or 7 exchanges at least. And it was a combination of, price going up, volatility going up, and the volumes were clearly going up. As price goes up, if the people trade the same amount of Bitcoin, whether the price is at $100 or is at $10,000, they don't really think in dollar terms. So a Bitcoin at 100 and a Bitcoin at 10,000 is really not the same thing, but yet people
treat it as a Bitcoin.
Exactly. So it's good for dollar vol. It's excellent. And I hope that if by the halving and there's some belief that the stock flow models are correct, then maybe at 90,000, people still be trading the same amounts of Bitcoin, which means volumes and volatility is going to be quite wild. So, looking forward to that. We did, from 100 to 20,000. So I don't see why we couldn't go from 8,000 to, pick your high number.
Target. Yeah.
Yep.
So you guys, it sounds like you took a strategy for market making and working a book basically from 2012 and FX markets, and you transition that. This is an algorithmic strategy that you put into.
It's proprietary. So to answer your question, XBTO is primarily a proprietary trading firm. We trade our own capital, and we don't have any external capital as of today, but we are much more of a crypto finance enterprise today. I like to refer it as such because we make investments in other firms, whether crypto or blockchain, crypto trading, and we are in mining, and we're starting to look at strategies that can be offered to certain certain parties, mostly institutional parties, but we haven't really made any progress in that regard, and so we're kind of careful. And it's a complicated regulatory space, and as you can tell, you can be surprised. You may make an assumption one day that you think it's pretty ironclad, and then the next thing you know, it's not. And when you have other people's money, you have a real fiduciary duty to not be wrong.
So you have some flexibility because you're trading your own firm's money.
Right, exactly, which has helped us because we wouldn't have been able to operate the way we operate if we had been with our hands behind our back, trying to.
So did you guys have a macro bullish thesis for Bitcoin in order to take directionality, like to account for directionality in the market, so that you benefit twice? You're making a market at the same time. You got a bullish bias, and if you're right on that bullish bias, you win in magnitudes.
So early on, we decided that we would never short Bitcoin because the risk reward is just bad. Of course, we can go short Bitcoin for a few minutes or so, but it was never the idea to take a long-term stance against Bitcoin. So naturally, we had over time some inventory of Bitcoin. And so, as the price goes up, your inventory goes up. But we never took undue risk in being balls long and just hoping for the best. That was not at all the strategy. And to this day, it's still not the strategy. But naturally, XBTO, if Bitcoin were to go to zero, I don't know that XBTO would really have a business. So we're naturally long the space, right? If you believe that Bitcoin represents the space, some people may disagree. But I think if Bitcoin does not make it, which is still a possibility, you never know. This is a space that has 100% vol. 100% vol means it could be zero.
It's a tough thing for some people to hear
quite quickly. So we don't believe that. That's not our base case. We do believe that the macro situation is quite dire. But
for the legacy market.
Yeah, for the legacy markets, interest rates are tending to zero pretty much everywhere. And if they're not tending to zero, it's because the there's a crisis somewhere. Zimbabwe may not have zero interest rate, but their currency is probably not the place you want to invest your money anyway. So the whole models are kind of being upended, right? They're upside down. Most models in interest rates kind of don't work in a negative interest rate environment. So a lot of things are happening. A lot of things are changing. Central banks are in a really difficult position because their main levers are not effective anymore. So they have to resort to other kinds of ways to prop up the economy or whatever they're mandated, prop up employment or decrease inflation or whatever it may be. So yes, I think Bitcoin definitely has a future in a world like that we have like today, and where there's unrest in some places in this world that are considered pretty stable, have been considered quite stable. Hong Kong is, had been considered a pretty stable place. Now it's going through some turmoil. We don't know where it's going to be in 5 years. And so that does beg the question, where do you go? What can you bank on? What is risk-free or close to risk-free? Can you consider the dollar risk-free? Today may seem like it, given the rest of the world, right? You look at the euro, you look at yen and all these.
Yeah, there's this dollar liquidity shortage going on where even though things like gold and silver have started to turn around and do pretty well, the dollar's doing pretty well at the same time. So that's been an interesting trend.
Yep.
But that's pretty much all to the downside of every other currency in the world. So we've had this interesting case, I guess, for most of this year now, where gold, silver, Bitcoin, and the dollar all going up, and pretty much every other global currency going to crap, and interest rates going to crap.
Yep, exactly.
Are you paying a lot of attention to that in terms of the way you think about Bitcoin, the way you want to be exposed to Bitcoin,
so
how it fits in the legacy landscape?
Yes and no. I mean, when the Fed comes out and cuts interest rates, do I think, do I want to buy Bitcoin or sell Bitcoin? Today, I don't think that way, because I think Bitcoin is too small to be part of that sort of, the players that are in Bitcoin are not the same that are in, trading the Fed, and so there's not a whole lot of, it's very decorrelated still. It may eventually enter and become an institutional product, and Bakkt and CME and CBOE and, well, not CBOE anymore, but once upon a time, they've all are trying to make Bitcoin an accepted institutional regulated product, and that's good. Now the problem is that the institutions are not necessarily running for it. And so that may take, we're always saying, by the end of the year, we're going to have some institutions coming in, and they kind of, maybe
institutions
they come in,
are coming.
They're trickling in very slowly. Yeah. So the answer is, do I make a direct connection between what's going on in the world and Bitcoin? Not always. Do I think Hong Kong could have an impact on Bitcoin if it really were to get worse? Maybe it could.
Yeah.
It could.
Like if they lose their peg.
Right. I mean, and look, and China has always been considered a very strong factor in the price of Bitcoin, whether it be the miners or just capital flows. And these days it seems like it's more into Tether than into Bitcoin. And there's a little bit of this interesting divergence that's going on, where they're buying dollars by proxy of things like Tether instead of buying Bitcoin. I don't know what that means for the long term yet, but it is interesting. But it does show that public public blockchains or cryptocurrencies are probably here to stay. And there's a little bit of chatter already that some countries may look to create sovereign digital currencies that are backed by some kind of ledger. We don't know yet the details of that, of what kind of ledger it could be, but if it's backed by Bitcoin or Ethereum, that's quite interesting.
Even if it's a tiny percentage,
it's less interesting, but it is nonetheless a good step, and it's a step in the right direction.
So I want to get into stablecoins and everything that y'all are doing on that side of the house. Before we do, I want to figure out a little bit more of the scope of XBTO. It sounds like primarily you have money that the firm manages and it's your own money, and your goal is to make money, and you're doing it through a lot of things. Like you said, under your primary, just your U.S. side of business, you've got OTC, basic asset management, you're doing some VC, and you even have consulting sitting there. What role is mining playing in your business? Is that a significant part of your business today? And are you mining just Bitcoin, or are you mining other cryptocurrencies too?
So we are mining Bitcoin and Ethereum. So we have both ASICs and GPUs. It's not meaningful. It's a decent operation, but it's not
a significant.
It's definitely something I would not call XBTO, a miner. We're a small miner.
Okay. And then your OTC desk, is it primarily when you have something come along, or is it a primary part of the business?
It's also quite small. We are, obviously, I think we do get a lot of calls, and we do facilitate, some principal trading over the phone or over, the chats. But it is not significant because we find that OTC trading is not very profitable. At the end of the day, it takes a lot of resources, and at the end of the day, it's a very competitive space. Everybody's trying to do OTC trading. Every desk out there, and I'm talking spot OTC trading. I'm not talking about derivatives, which is this sort of next wave that's quickly coming. But spot trading is not that interesting to us. So yes, we'll pick up the phone. Yes, we'll give you a good price. Do we think that it's going to make XBTO? No, not today at least.
Okay. So it sounds like the majority of your business is based around a combination of making markets and then having directional bias.
It's algorithmic, systematic trading. We have a lot of algos trading on a lot of exchanges, and we trade a lot. It's just computer driven, and we just do the risk management.
Yeah,
so that's valuable to us. OTC is more, we use some of our algos to hedge and to gain an edge, but we don't have enough OTC flow for it to make it a worthwhile business.
What's your outlook for cryptocurrency beyond Bitcoin? It sounds like you have some belief in Ethereum or maybe other smart contract networks. Do you have a belief in anything in regard to all the 2017 hype of the token economy or the slew of altcoins that exists in the world, or do y'all try to stick to really big caps or things that you can get algos on and make markets, or how do you approach the rest of the world outside of Bitcoin?
Yeah, so we're mainly Bitcoin and Ethereum, and really top 10. Although besides these two, I don't get excited about where they're going. I don't.
There's some weird stuff in the top 10. Like you can say top 10, there's still some weird stuff. Like I don't know if Tron is there, but
and all that stuff is not that interested in it. Whatever. But look, Bitcoin and Ethereum, for me, I can wrap my head around what they represent. for people. And I can say I understand why people would like Bitcoin. I understand why Ethereum has value. Look, most stable coins today are backed by the Ethereum network. Paxos, Gemini, USDC, even Tether now is on ERC20. They migrated from Omni. And a lot of so it's now the most, it's Tether on Ethereum is the biggest contributor to fees right now. It's the transactions. I think it's number one.
Yeah, I think it's the
kind of
top or second top.
Yeah.
Data
Well, I think it's the first now because the other scheme,
some kind of scam or something.
Whatever it was, I think ended a couple of days ago. So it's sort of alleviating the congestion on Ethereum. But yeah, clearly Ethereum has some growing pains. And we'll have to see with this new release if, sharding and proof of stake, if that really does, if it helps or not. And it's a big change, to be honest. I'm a bit worried about it because if we don't get it right, there's a lot of value on the Ethereum network that kind of is in the balance here. If you believe in things like Maker and all these stable coins and DeFi in general, they're all mostly on ERC20. They're not sitting on EOS or Tron or any of these other networks that, some people may find interesting. We didn't really invest in any of these, and we do research on all of them and we look at them, but we're not that excited by them.
Before we get into the stablecoin side of things, when you do take a position or you choose to participate in a market, let's say it's XRP or something, do you try to figure out a way to stay kind of delta neutral on those types of products and lose your bullish bias, or do you are you willing to hold inventory and take the risk of that inventory while you make the market?
We have many algos. Some algos have directional bias. Some algos are totally delta hedged. So some of them are momentum. Some of them are risk reversion strategies. So it's hard to say. But for the most part, if it's not Bitcoin or Ethereum, it's very likely that we have a zero bias.
Okay. Yeah. Cool. All right. So sounds like you've been doing XBTO for some number of years, and along comes really this massive proliferation of stablecoins spearheaded by Tether. But now we've got a bunch that are trying to, I don't know if you call it unseat Tether, provide a better alternative to Tether, be more algorithmic and less directly backed, or whatever their pitch is. You guys come out with something called Stablehouse, and you're calling it a digital currency clearinghouse for real-time cross-blockchain payments. I think before you said it was for real-time stablecoin liquidity. So tell me what that means. And obviously you believe in the stablecoin side of this market, what it could mean for maybe decentralized finance, or what kind of fundamental opinions do you have in this landscape?
So, I believe that, tactically speaking, a Stablehouse is what you said about stablecoin liquidity. I mean, that's sort of like tactically what we're trying to do, right? Is to make sure that when you're trading a USDC versus a Paxos or a Gemini, that you're basically getting a 1-for-1, because it's effectively check clearing, right? It's clearing a JP Morgan check for a Citi check on a blockchain time, right? So 10 to 20 minutes.
But a lot of times there's inefficiency there, where you got 98 cents on one and $1.01 on the other.
That's right.
So it's a very clear opportunity when the known peg is 1.
That's right. So what we're trying to do is make things a little bit more straightforward, because all this inefficiency is good for a trader, right? But it's not going to last, and it shouldn't last. If we really believe in the efficiency and the value add of blockchain, we can't be living in a world where it's less efficient than a check between two banks. It does not make sense. So what sort of the long-term vision, the strategy, right, is to say, what can stable coins do for the world? And if you extrapolate, you can use a stable coin for all kinds of things, payments, cross-border, transfers, merchants, paying for stuff, and remittances, and pretty much anything that you can use a dollar for, right, on a wire transfer. So what we're trying to do is say maybe stable coins can, replace Visa, MasterCard, SWIFT, and Western Union in one fell swoop, right? Why not? And so, that's sort of the idea. And so it's a stable coin platform, but it's also an FX platform, right? A physical FX platform, because you're taking in a certain stable coin in a given currency, and you're remitting another stable coin potentially of the same currency or of another currency, right? So if Japan or Switzerland or the Europe has their own stable coin, then Stablehouse should be able to, in a transparent and cost-effective way, go from dollars to euros within 10 to 20 minutes, right? And you should be able to, hopefully one day, and that's why we're blockchain agnostic, you should be able to pay for your coffee using your Paxos coin in a coffee shop in Tokyo or in Paris, right? And so, and it should be very, very straightforward.
So there's a couple of ways to think about that, right? Because one is from a trader's perspective. So let's say I'm trading on some Paxos pair, and I'm, I got to get it from Tether somehow, or I got to get it from Bitcoin. You're offering that interchange to where this transfer from Tether to Paxos is no big deal. But then you're talking about a whole different type of trade, a different type of transaction where it's retail driven, and it's someone with something on their mobile wallet where it's a stablecoin basis. Maybe they've got some USDC, but they need to pay in JPY, and you're making that a process that you can manage as well. So that's two-sided, huh?
Correct. This is the long-term vision. We're not there yet. Stablehouse is more of an institutional product first, and then it can evolve either directly or indirectly through other payment, wallet providers that connect into Stablehouse and do these kinds of, offer these kinds of products. So for now, it's more geared to market makers, liquidity providers, potentially payment processors, and where it's opened to them, and we call them members, and they can come in and make a market on all of these stable coins.
Are you getting an uptick of members that are from like exchanges that are trying to provide these markets as well?
So currently Stablehouse is not live. We're working on obtaining our license from the BMA, the Bermuda Monetary Authority. So it is closed now for now. It will eventually, hopefully soon, go into an open beta that is that can accept more people, more entities. But for now, it's not live.
Okay, so you've on your website the vision for this looks like a web app where people can go in, they have balances, they can trade, they can see activity perhaps on different stablecoin networks, what that looks like, what's clogged, where there's demand. So someone can see, an opportunity where there's increasing demand maybe on one network, and they transfer assets from one to another. That's one of the things that's interesting to me is you have this rate matrix. So it's a graph pulled up with, say, a USD basis, but then you're looking at like GUSD relative to USDC, and there's this 33 basis point spread, I guess, is what's being pictured there. And the idea here is that your members will be able to come on and they'll be able to participate in these provide the liquidity on both sides and over time narrow these spreads and
That's right.
create a clean market, right?
That's exactly right. And we are looking also to do a lending market down the line because I think this is something that people want, and it's a natural evolution. Lending has become over the last 12 months important in the space, and people are sitting on some stable coin and they want yield, and actually most recently Coinbase, by way of USDC, is offering a 1.5% APY yield on your holdings, which is interesting. I don't know the fine print on that, but it does show that there is progress where it's becoming a little bit more traditional, right? Where the dollar on a ledger or on a stable coin kind of retains the characteristics of what a dollar in a bank account would have, right? Where you expect to have some kind of yield. Of course, if interest rates go to zero, all you have is a credit risk. There's nothing left otherwise. But yeah, so it's an interesting evolution, and we're looking forward to offering some of those products down the line.
Yeah, do you think that those lending rates are worth the network risks that exist on some of these stablecoins today?
I'm not really sure if they do or not. I'm still trying to assess the situation. Crypto is weird sometimes. Will it go away? Will it normalize? I don't know what's normal anymore. You look at the world and say, risk-free rate. Okay, yeah, what risk-free rate are you using? Well, your risk-free rate might be much more risky than, something that you consider much riskier, actually.
So I guess people are trying to make some tough choices. Do they want to have network risks for holding a stable coin pegged to a dollar or some sort of dollar, or do they want to pay for the privilege of lending money in euros or whatever else? So
correct. There's network risk, and look, that's why the value of Bitcoin is in its security and its hash, and it's you look at the value of a public blockchain like Bitcoin, and you compare it to the others, and you're like, well, what makes Bitcoin so much better, irrespective of its monetary, the hardness of its money and the policy. But a blockchain is a good blockchain should be considered very secure. And how do you gauge how secure a network is by how much proof of work, right now at least, that's the prevalent method, right, of assessing whether a network is susceptible to attack, right? And Bitcoin is clearly the leader today in saying, hey, I'm going to run my immutable app on Bitcoin because it is the biggest network, even if it is somewhat inefficient.
Yeah,
arguably, it's probably better than some of the others. That may be faster. Sure, they may be much faster, but they're also susceptible of going down and being subverted.
Yeah.
Cases.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
I was thinking about something on this lending side of things. So is Stablehouse going to be the depositor where you're holding the assets, or do you have a programmatic interface? I know you have an API, but how do you establish the collateral scenario? Like, are people going to have to offer you the collateral that you hold on their behalf in order to lend to them, or will it be contractual agreements, or what's the setup there?
Yeah, look, I'm not exactly sure how this is going to evolve. This is contractual obligations are nice, but there are very, very few entities today with whom you can kind of have that relationship. So I don't know if it's something that we can really leverage off of and make a business out of. So I would say that my gut feel is that in a first iteration, it would require some kind of collateral on that we would custody at Stablehouse.
But one of the benefits that you would have, I would assume, is that, say it's an exchange that's your customer and they have markets in multiple stablecoins, they can have multiple stablecoins posted as collateral that are in use in this. Not to mention the whole idea, one of the ideas in a blockchain is it's an efficient way for transferring assets quickly and easily, so that they can be earning money on having that with you, but if they need it for providing some kind of liquidity or whatever in their own markets, with withdrawals for their customers or whatever, they can provide that access to their customers quickly. Is that the baseline idea there?
Yeah, I think you're right. You're onto something. And what I do, I like to listen to smart people because obviously best to listen to smart people. But in this case, there's a lot of noise, right? And the signal to noise ratio is not that good. But what I like to do is when we develop products is I don't want to take too much time, but I like to take my time in assessing what the market wants and needs and what people are thinking. People who have been in the space for a while and understands not only the traditional world, but the crypto world, right? And how it comes together. And so the product is not fully baked yet. So I think we want to learn from our customers and from people who've been in the space and who are actively in the community, thinking about things and solving problems and integrate them. We don't want to integrate everything because obviously you're going to get lost and you have to make some decisions. You don't have infinite resources, but certain things are worth integrating and taking the time and resources to do. And some others are more superfluous and they can take, they'll come later. So I'm still sort of like in the thinking stage. I'll be able to sort of demo that kind of feature maybe in a few months. It's not ready just yet. So
maybe if your product set is flexible, if you're flexible to the demands of what the consumer wants, underlying that though, you do have some technology, some code that's part of this API that you're offering that makes the fundamental components of managing stablecoins flexible across products, right? Because you're storing stablecoins, managing keys and other things and accounts, and you're also making it to where you can process stablecoins, provide a spread or an exchange basis or some kind of swap for different coins. So that's the underlying product that you've developed so far, and now you're saying, where is the market telling us to take this capability and deploying it?
Yep.
You mentioned at the top of the show, one of the things you're interested in is the stablecoin demands in other parts of the world, where I think you mentioned Hong Kong, but just places where maybe people would lean on Bitcoin as a place to hedge their assets from their own fiat currencies or whatever else, but also stablecoins and Tether. What are you seeing there? Like, what does that make you feel as a Bitcoiner, for one, when people are looking at something that's pegged to the US dollar and saying, hey, this is interesting, or Is it accessibility? Are people finding stable coins more accessible than actual dollars? What are your ideas there?
Well, I prefer Bitcoin to gold, but I don't necessarily prefer Bitcoin to dollar all the time. I don't know that Bitcoin will take over the dollar 100%. It's never my thought. It's not.
That's not your.
I don't live my day thinking, oh, I have a dollar, I have to quickly convert it to Bitcoin. So it's part of a portfolio, and Bitcoin has features that are very interesting and that make it better than a dollar. But it has a lot of volatility and a lot of risk, and it doesn't have the historical, the history of the dollar. It doesn't have the history of gold. So empirically speaking, when you look at gold as a store of value, and you say, well, Bitcoin is a better store of value than gold, some of the features of gold, I think, in 100 years or 200 years may become close to gold, but I think it's still a stretch to say that, because gold has so much history, and it's not very much used in industry anymore. I mean, I think it's less than 10%. So it's jewelry and all that, but at the same time, it does retain its value, and it's less volatile than Bitcoin has been in the last 10 years. So, will that normalize? I hope so. I certainly think it should, but I don't know.
So you think it's a pretty natural response for someone to say, hey, I want to get my fiat currency somewhere. I can deposit here and get it into a blockchain ecosystem and into a stable coin. That's
it's a bare asset, right? I mean, it's like having dollars in cash, except you don't have to worry about them having them, a whole wad of it in your
in a bull market. In a bull market, you would tell your grandfather or whatever, like, hey, don't put that in your mattress, go put it to work. Put it in a business or some real estate or whatever. So it's like you say, it's bare asset. It's a risk off move to say, what, I just want to park myself in some dollars and feel good.
Right. And it is practical. If I could pay with stable coins instead of, paying in cash, right, I would do that every day, because, cash is it's dirty. It's kind of annoying to hold. You're getting change back. It's not really. It's most places are going cashless anyways. So for me, I'm thinking, if I could hold my dollars in digital form in my phone, that's great. That's a great idea. And some apps obviously do that, right? I mean, I'm not saying that it's not being offered somewhere, but these apps usually are very location centric.
And dollars in hand are expensive,
and they're expensive. You do want to get a yield on your dollars if you can.
Right before we got on this call, I was with my son. He had a school field trip to the pumpkin patch, and I was trying to buy him a pumpkin. They don't take credit cards. I can't Venmo them or PayPal them or something. And they were like, but we got an ATM machine over there. So for me to take out $40, it was $2.50 of a fee to get two $20 bills in my hand. It's just kind of ridiculous of a concept. That's almost 10% just to be able to pay for a pumpkin, So physical cash is hard. I think we're both on board with that. In terms of how much easier digital currency makes things, do you think that there will be a digital cash, like you said, some countries are looking at, that's like formal from each country, or do you think it'll be these open protocols where these corporations are taking part and they have their own little stable coin that's pegged to a fiat currency? Do you have any thoughts on where we're going there?
I think it may be a combination of both for a while. There is a political reason for a country, especially a country like the U.S. That has a strong currency and that has, the dollar hegemony. It's important. And I could see, the U.S. trying to join the space and create a currency that is on some kind of ledger. Now, whether it's a public ledger or not, I don't know. And we know China has been looking at this for a while, and I can't remember whether or not they were going towards more of a private ledger. I think it was more of a private ledger. I mean, I can't imagine they would
I
just,
can't. Yeah, they're going to want full control.
And so that's the thing, right? Control is important. You have your own currency, your country. You want, your currency needs to be part of that sovereign thing that you're controlling, right? I mean, the Fed may be completely independent from the U.S. government, but let's face it,
not independent.
The U.S. dollar is integral and critical to the U.S. Government and to the country, and to many places in the world that don't have a good currency, right?
Yeah,
dollar is used pretty much everywhere.
Yeah, you can give $1 to anybody in the world, and they'll be happy to have it. What about the role stablecoins will play in smart contracts? When I think of smart contracts, one of the concerns I always have is, okay, well, cryptocurrencies, these three components of a currency that we want, the store value, the medium of exchange, the unit of account. And I always get stuck on the unit of account. I'm like, why am I going to have some Ethereum smart contract that is, saying, okay, if this happens, do that. If that happens, do this. Meanwhile, Ethereum is going from below $100 to $1,400 and back again in a single year. That's the greatest risk in that system. Do you think stablecoins will be the dominant underlying currency for future smart contract agreements that actually make it in the real world?
Well, that was our thesis a long time ago, and it's certainly shaping up to be that way, but I don't know. I can't. Do I believe in smart contracts the way they exist today? I mean, not really that excited by it. I think we were thinking, they're going to be able to do all kinds of things and be their own little, like decentralized autonomous agent and all that, but we are way away from that. Yeah. And there are so many edge cases that a smart contract at the end of the day doesn't really represent much. You can run some decentralized apps and you can call it a smart contract, but it's not really. It's the wrong. I don't think it's the right terminology, right? It's when you look at something like a maker, that's an interesting way to use the Ethereum blockchain, but is it going to be used, by a lot of people, massively adopted in the future, or is it just a niche kind of product? I don't know. Right now, it's certainly shaping. It's kind of small, right?
Yeah.
So we'll see.
People are using it basically to borrow and go long on Ethereum. Like they're using it as a pretty crappy derivatives
speculative.
Platform.
It's very speculative, and we have to get beyond that, right? So the next wave I hope will not come from bigger speculators, but by people who have another reason to use it, whether it may be speed or ease or it's more cost effective. That's what I want to see. And that's what I think will eventually propel, the sort of the Ethereum network higher, or the Bitcoin network if you have some side chains that are widely successful. Liquid is one that is sort of supporting now Tether also. It's very interesting, and the more things are built on Ethereum and Bitcoin, the more value those blockchains have. But you don't want it to be just speculators and money just flowing from one entity to another and back to, it's not that, It's
That's
that
not
interesting.
useful if you need to go.
Yeah, a massive casino is fun, but it's
It's
I
not.
have bigger hopes
Yeah,
for
yeah.
blockchain. Right.
So what are you most bullish on today? Let's throw the price of Bitcoin aside. Let's talk about this economy of putting stuff on digital ledgers, whether it's stablecoins, the Ethereum network, or the blockchain ecosystem in general. I've got some ideas for things that I've always imagined, like, oh yeah, I think this makes total sense. Like bringing liquidity to private corporations is the type of thing to me that is very interesting. What's very interesting to you? Like, what's the stuff that gets you excited about the blockchain ecosystem and maybe where your products can fit into all that?
Well, thinking about what excites me these days, and basically what excites me is what I invest in, and it's sort of the natural evolution of the space. Is derivatives, for example, options, I think are going to play a very important role in the space, a stabilizing role, and a way for people and for miners, for example, to hedge effectively their risk of securing the Bitcoin network or the Ethereum network and all that. So I am excited about derivatives and especially options.
Who do you think's approaching it well? We've got Deribit. Now we're leaning in on Bakkt doing it. Where I guess Ledger X has been doing it some. CME is
Yes.
reported to be coming out with them. Who do you think's doing it right? Where do you see promise with the options market and crypto?
Well, I'm biased because XBTO Ventures actually is an investor in Deribit, has been for a number of years. So I think Deribit is offering a product that people want, and that's why the volumes are where they are.
Yeah.
Unfortunately for Ledger X, and we can see it
Publicly.
very, very publicly, is that they're hamstrung by the regulators, and the legal framework is just not conducive to having a product that people want. If you can't get leverage or good capital efficiency, your market makers are not going to give you good spreads, and your takers are just going to be like, this is too expensive to trade, and you're going to end up with very low volumes.
Right.
And unfortunately, that's what's happening. So Deribit is a bit different because right now they're sort of working in a way that enables them to be levered and to allow portfolio margining, to be capital efficient, and to provide a product that people want and are able to trade and don't feel like they're getting ripped off or that it just is a product that's just too expensive for the business that they're running with it. So a miner that has to pay a huge amount of money just to hedge will just say, I'm going to self-insure, right? And they're just not going to buy the product. Regulation, good regulation ends up giving you a product that is balanced in the sense that it protects the user, but also gives the user, the benefit of the product, right? If regulation is too tight, and I think since 2010, Dodd-Frank, things have become very, very tight. You've got products that at one point made sense, do not make sense anymore, or you've got constructs that are the results of politicians coming up with laws, and they're just kind of weird products. They're like, oh, you got to do things like this, otherwise, it's not going to work. And you're like, well, this is not going to work because that's not what business wants. But nonetheless, people are like, oh, they're building product based on the law, but not really thinking through, well, can I really make money off of this? Do people really want this? And so so I think Deribit is doing it right. That's why they've grown so much, and I think they're really doing a good job in sort of balancing, a fair and orderly market and giving people what they want, which is good amount of leverage and and just capital efficiency.
Do you think that there's going to be any path forward for an American retail participant to take full advantage of the market, or is that just one of the consequences of being in the U.S. today?
I don't like to make generalities. I think the CME is eventually going to come up with options in February or in January, something like that.
It's reported out now, yeah.
And I hope people use them, but I don't have the details on what kind of leverage and margining you can get. I mean, I think the commissions and all that are going to be quite fine. They're going to be competitive from that perspective. But I think from a portfolio margining and a leverage perspective, I don't know what that's going to end up being. So we'll see. I mean, CME, I think, definitely has a good product with their futures. It's rivaling some of the bigger players out there that are more retail focused and crypto specific, BitMEX, et cetera. So it's possible that CME comes up with a product that people want to use on the options side.
Are there any other genres, especially on the stablecoin side, where you think there's going to be significant growing demand for?
I think stablecoins is just the DeFi movement is exciting to me. I like to think about it because there are places in this world that finance has not touched, right? That you cannot offer loans to. It's hard to do logistically, and it's too expensive to do. And I think DeFi may provide a way for everyone to provide loans, microloans, to people that have historically not been able to be banked and have not been able to be the recipient of such loans. And certain places in Africa,
significant part of the population globally falls into that.
Yeah. And in the U.S. also, although I try to think outside of the U.S. In places that don't even use a dollar. But yeah, you're right. I think banking is for the rich. At the end of the day, it's hard to be. Banks are just there's just too much overhead for a bank to provide good service to a big piece or a big segment of the population. And unfortunately, the world, there's a huge dichotomy that's getting, the gap is getting wider and wider. Mm-hmm. And there are more people that are falling in that category of not being able to be properly banked.
And banking's expensive too. It's another example of where if you, especially for much less third world countries, but even say if you're in the States, a lot of banks, they'll charge you fees for checking accounts if you don't maintain minimum balances. I just was running into this because I have multiple business accounts, and most of them are pass-throughs, so they kind of funnel automatically into the primary account or whatever. And I was like, why am I getting these stupid $15 a month type of fees for something? And it was because I wasn't meeting their minimum thresholds, because I was always receiving income and it was automatically moving into the next account. And I was like, so you're telling me I've got to keep whatever, $5,000 in an account just to avoid a monthly fee to give you my money? It's ridiculous. But that's not accommodating to a modern world, especially one, if you think about third world countries and where people may have balances of single dollars in their accounts, and they how can they be charged for maintaining the account in the first place? It's insane.
That's right. Yeah, and look, those $5,000, you're not getting interest rate, any kind of yield on it. So it's really there's a real problem. So we'll see. I'm excited about about the future of DeFi and the future of stablecoins and just blockchain in general. I mean, you always come back to that because it is the underlying technology that backs it, that backs all of this. So I think people have stopped thinking of blockchain versus crypto, and are starting to understand that a blockchain without a token of value is not really much better than just a glorified database. And yeah. And a crypto without a blockchain is I'm not sure what it is. It's it's a scam.
Yeah.
So
is there anything that I have not asked you today that you feel like needs to be expressed?
No, I think we've covered a lot of ground, and I think it was a great conversation. I appreciate you reaching out to me, and I was happy to join this. It is my first video podcast, so that's cool.
Well, I appreciate you coming on.
Yeah, and I'm looking forward to more of these.
Yeah, and if people want to keep track of what you have going on, and maybe if you guys, I don't know if y'all are ever hiring or anything like that, but you've got stablehouse.io is your new website for that product. Then there's XBTO, which is just at xbto.com. There's a bunch of about us and partnership opportunities for people that are in the market. What about you personally? Do you have a Twitter where people should follow you to get all your insights?
Yeah, I tweeted about a couple hours ago about
about being on
the podcast.
I was at the pumpkin patch, so I didn't see the handle. There you go.
So you can
I'll link that up. It's Philippe Bekhazi. So
that's
the
right.
first part of your last name there.
I have not historically been very active on Twitter. I'm still trying to find the right balance. But it's certainly the only social media network that I use. I don't use any of the others anymore. I just don't have the time, and it's hard to compete sometimes, and I have other things to do, to be honest.
Yeah.
And we're 30 plus people at XBTO, and Stablehouse has a few people of its own, and we're ramping that up as we get into production and regulated. So there's a lot of work here that I have to focus on. But yeah, Twitter is I'm trying to dedicate some time to it.
Cool. Well, I love talking to people that are really in the weeds, and especially if they have their head down, being able to have the opportunity for them to lift their head up and talk about what they're doing. And one of the things I just want to point out, there's a lot of firms in the crypto space where they manage other people's money, and they may have their reputation on the line because they don't want to lose money and have their investors bail on them, and they no longer have their hedge fund or whatever 2 or 3 years from now. It's a whole different thing in my mind when someone has their own bankroll and they employ enough people to where you're doing multiple things there. You're increasing your net worth to make this worthwhile doing, and you have enough in the middle, in the margins, to employ the people that you have creating the products that you're putting together. So you've got a lot on the line there, and it's also, you can't be in business unless the pudding was out. You got to be making money with your strategies. So to me, I give a lot of credit to somebody when the purpose of their business is to manage their own money and to make their own way. So I appreciate you sharing your thoughts about the ecosystem as a whole here, because I think coming from someone that does manage their own money and their firm's money, and that's the point of their business, I think that's an incredibly valuable little nuance relative to what we see in a lot of the market. Not to say there aren't smart hedge funds managing other people's money, but we know you're doing a decent job because you're still in business.
Well, I appreciate that very much, Brian. Thank you. It's not easy every day, but it is, I'm excited by the space, and I think Walton and the whole team is just believes generally in the space. And so I think there's there's a sort of second bottom line here. It's not only about the money; it's also about being sort of a responsible party and sort of growing the space, right? It's just making the space, because I do believe that there's a few pillars in this ecosystem, and that just need to push things forward. And I hope that we're one of them. I think we are, and I'm certainly working to be one of them. So, but thanks for those comments. That really resonates, and I appreciate that.
Awesome. Thanks for joining us. And everybody go to ledgerstatus.com to check out this episode and more. And we will catch you next time. Have a good one.
Monuments crumble